So yeah, just want to welcome everyone today. I'm Logan, co-founder of Landlord Studio, and I'm excited to have you all here today to join us for this webinar on rental accounting and obviously preparing for the tax extension deadline, which is quickly coming up. And so our goal today here is to help you understand the different real estate tax deadlines and some of the real estate tax changes that have been implemented or are going to be implemented for 2024 and 2025. But just want to note, this webinar is purely informational. Nothing should be considered tax or legal advice in this webinar. If you do have any specific questions or concerns about any of the topics that we talk about today, do reach out to a qualified tax or legal professional. We encourage you to do that. So let's start by introducing our guest, Thomas Castelli. He's been on our podcast quite a few times in our webinars. He's a seasoned real estate investor, licensed CPA, financial advisor, host of this Tax Smart Real Estate Investors podcast. Welcome, Thomas. We're really thrilled to have you back again with us today.
Thank you for having me, Logan. It's always a pleasure.
Yeah, it's always a pleasure. So towards the end of the webinar, we'll also explore why bookkeeping sort of throughout the year is so important and how Landlord Studio can help. But if you do, again, have any specific questions for Thomas around these tax changes or the bookkeeping sides of things, again, drop them into the chat. We'll use the time at the end to answer as many of them as possible. So yeah, let's jump right into it. And I'm keen to start actually by talking about the sort of important upcoming tax dates. So let's start with the immediate deadlines that are sort of looming in the background. Thomas, the October 15th tax deadline is coming up really quickly, and it's something all landlords need to be prepared for. Can you talk us through the significance of this deadline and what landlords should be doing right now to ensure their accounts are ready?
Yeah, absolutely. So the October 15th deadline is the tax filing deadline for individuals. So that will be your Form 1040. That is the extension deadline. So these are typically due April 15th. However, it's not uncommon. In fact, it's very common for real estate investors to file an extension and then file their return by that October 15th deadline. So if you've not already filed your tax return and you're doing it yourself, you're going to want to make sure you get that all tightened up and filed by October 15th. And if you're working with a tax professional, you're going to want to make sure that they have everything in order to file on or before the 15th. At this point, I would say you should already have all your documents into your CPA. But if you do not, you definitely want to make sure you get it to them as soon as possible and make sure you're on track to file on October 15th, because if you don't file, you could be facing penalties for failure to file and then potential other penalties if you do owe taxes and stuff like that. So long story short, it's the tax filing deadline for individuals.
And why would a real estate investor usually get a tax deadline? What are the sort of scenarios around that?
So as a real estate investor, you're either going to be filing your property, so on Schedule E of your Form 1040, which is due on the 15th, and then if you or if you are a partner in various deals or ventures, you will be receiving a K1. Those are due. The partnership returns are due 9/15, so September 15th. That date's come and gone. And then you'd be filing your K1s with the information about your properties on October 15th. So if you're a real estate investor, chances are you have this October 15th deadline if you've not already filed your tax returns before this deadline.
Great. So again, if you yet to hand in all your information to your CPA, definitely do that as you don't want to hit that deadline and not have everything ready to go. So just another important reason why keeping all this documentation and correct and accurate income and expense tracking is just so important. So going beyond sort of October 15th, maybe give us a quick summary of some of the other important tax dates landlords need to add to their diaries, Tom.
Yeah, absolutely. So some upcoming dates you're going to want to be aware of is December 31st. There's not much specifically for real estate investors, but just for general taxation purposes, if you do have retirement accounts like a 401k, you're going to want to make sure that you want to make sure that you fund your employee contributions at that point. If you have a health savings account or you want to open one, you want to make sure that's open by the 31st. Additionally, there's actually some things on the real estate side now that we break it down a little bit. If you are going to be, if you do want to claim depreciation on rental properties, you want to make sure they're placed in service by 12/31/2024. So for like long-term rentals specifically, placed in service means that they are rent ready, which means they're up to code, and available for rent, which typically means they're listed. It's important that that is done before the year end if you do want to claim depreciation for that property. Now, you do not need to have a renter or tenant rather in your property by the end of the year. You just want to make sure it's placed in service. So that's critical that's done. Additionally, just general expenses. If there's any expenses uh, you want to accelerate for 2024, you want to make sure that's also done before 12/31. So, for example, if you're planning to buy a computer early next year, buy it before the end of this year if you can, because then you can deduct it on this year's tax return. Same thing with business vehicles. Pretty much any expenses that you want to be reported in 2024, you want to make sure you get those in. Last thing I'll say on that is for short-term rentals. While you can claim depreciation if the property is placed in service by the year end, if you are looking to use the short-term rental loophole or the short-term rental strategy, however you want to look at it, however you want to say it, that strategy, you do need to have renters in your property. You need to have guests stay there. We usually recommend at least 2 guests, if not more. The more the merrier, before the end of this year. If there's no guests, then you're not going to be able to use that strategy in 2024.
Great. And you sort of mentioned getting ahead of that bookkeeping or implied that. So why do you think it's especially critical for landlords to start this process now
Absolutely.
rather than later?
Yeah, absolutely. Bookkeeping should be done. Bookkeeping should be done ideally on a proactive basis throughout the year. But if you've not already started that, getting ahead of that now does a few things for you. It's going to be fresher in your mind, so you're not going back on later on, early next year, trying to remember everything that happened in 2024. Additionally, when it comes to filing taxes, for your rental properties, your profit and loss statement, again, that's going to be reported on Schedule E of your tax return, is one of the critical components of your return. And if you have to start doing that next year, like the further you get into next year doing it, just the further you're going to delay the preparation of your tax return. So, for example, if you want to get your personal tax return filed by April 15th, let's just say you want to do it on time. If you're busy in February and March of next year, rushing to get your bookkeeping together, then there's a good chance that your CPA is going to be booked for that April 15th deadline. So the sooner you can get on top of that, the sooner you'll be able to file your taxes. And while not tax related, your bookkeeping can help you understand, is your property profitable or not? How much income are you generating? And this can be particularly helpful for lending. Not particularly around year end, although if you are looking to finance a property around year end, that could help too. But at the end of the day, the sooner you get on top of your bookkeeping, the easier it will be, A, and then B, the sooner you can get that information to your CPA or your tax preparer for them to ultimately file your tax return. So long story short, the sooner you get on bookkeeping, the better. And if you can do it on a proactive basis throughout the year, like on a monthly basis, then you're going to be even that much further ahead of the game.
Yeah, completely agree. And I think this is probably one of the points that we sort of try to hammer is, understanding your finances in your rental properties is just so important, just from just understanding it as a business, knowing where you sit within the year, how much cash flow you're making, and where your expenses are lying as well, and obviously all the tax implications around that. So definitely get on top of that, especially as we approach the end of the year. So I want to sort of jump into some of these 2024 real estate tax changes that we've been hearing. So as always, there's obviously several changes to real estate laws or tax laws that go on throughout the year. So I want to sort of dive into that. And Thomas, one of the major changes we've seen is the Corporate Transparency Act. Uh, so what can you tell us about how this might impact landlords and real estate investors overall?
Yeah, absolutely. So the Corporate Transparency Act. So it's not uncommon to see rental property investors or landlords own their properties through limited liability companies, also known as LLCs. And when you have an LLC, there's now a new law, the Corporate Transparency Act, sometimes abbreviated as the 2024 CTA. And when you do, what that requires you to do is requires you to file a, a beneficial owners report, a BOI report for short, uh, with FinCEN, which is one of the financial regulatory bodies here in the United States, within 90 days of forming your LLC. If it's formed after January 1st, 2024. It was formed prior to January 1st, 2024, then you actually have until the 1st of January 2025. So you have a year to get those filed. And if you do not do it, there are penalties. I think the penalties could be up to $500 a day, if I'm not mistaken. So can be hefty. So you want to make sure you get those in. Now, the good news is you could file them yourself. I did an LLC earlier this year, right through the FinCEN website. It's relatively self-explanatory. And on top of that, there's plenty of third-party do-it-yourself options that can file it for you. And if you are working with an attorney, they'll usually do that on your behalf. So long story short, if you have an LLC, you are going to be you are most likely, in almost most cases, going to be subject to filing a BOI report. You have 90 days from the time you form your LLC, if you did in 2024 and going forward. And if you had existing LLCs, you have until January 1st, 2025. So you want to make sure you get those in.
Great. And again, that was through FinCEN. Was that the website?
Yeah, if you Google file your BOI report on FinCEN, you'll be able to quickly pull up the website.
Great. And we'll drop that link in the follow-up email that we send after this. Garen, this webinar is recorded, so we'll send a follow-up with that too. And so just going forward, another big change is that was related to bonus depreciation sort of continues to be phased out. I guess, how has this changed for 2024 and how will this affect landlords? And is there sort of hope for landlords that the government might pause this phase out or reintroduce the 100% bonus depreciation? Maybe talk a little bit around that.
Yeah, absolutely. So this year, bonus depreciation for 2024 is currently at 60%. So again, if you do want to get any properties, and if you do have any properties you do want to claim 60% bonus depreciation on, you want to get those in service by the end of this year, 2024. Otherwise, you're going to be looking at 40% in 2025 and 20% in 2026 under current law. Now, there was a bill that was passed by the House earlier this year that would have extended 100% bonus depreciation retroactively from to 2023 through the end of 2025. However, that bill was ultimately blocked by the Senate and never approved. So that is off the table. As for what there's a lot of hope within the tax community and real estate communities that 100% bonus depreciation will come back, or bonus depreciation at least will be extended in some way, shape, or form. I know that it is in President Trump's plan. If he's to be elected, he does want to extend 100% bonus depreciation, while Kamala Harris does not. So that's just what they've said. That's what they've supported, and that's kind of where we stand. So as of right now, it's really who gets into office is going to kind of be the strongest indication of when, if and when it does get continued. And assuming Trump does get back into office, we would expect that to be implemented at some point, but exactly when is up in the air. So right now, what we do know is that it's going to be 60% for 2024, 40% for 2025, and 20% for 2026. And that should not go away. If anything, it would be extended under certain circumstances.
Great. That's great to know, and something definitely to keep your eye on, as that sort of has major tax implications. 1099 is also another hot topic. Several new 1099 requirements coming into effect in 2024. Maybe clarify the changes for 1099 NEC for contractors, 1099K for rental income, and I guess what investors need to know about these two forms, and I guess any other changes that you're seeing around this overall.
Yeah, absolutely. I don't see too many changes right now around that, but the 1099 NEC is typically a require. You typically need to file that if you're paying independent contractors who are taxed as a sole proprietorship or a partnership. In other words, not a corporation. And if you pay them over $600, so if you paid a plumber, say $1,000 to come fix your bathroom in one of your rental properties, and they're sole proprietor or they're a partnership, you're going to need to issue a Form 1099 NEC, which are due February 8th, 2025, for the 2024 tax year. So that's the 1099 NEC. And again, those you can usually self-file those relatively easily. There's plenty of do-it-yourself softwares out there that can allow you to do it. As for the 1099K, the 1099K, what that is if you receive credit card transactions in excess of $20,000 or 200 transactions throughout the year, your credit card company will issue you a 1099K, and that would just be reported, assuming you're a rental property investor, on Schedule E of your tax return. But you would be doing that usually anyway as part of your normal filing process, especially if you have your bookkeeping in order. That should already be accounted for. But it's just important to be aware of what that form is in case you do receive one. That's because you use basically a credit card, debit card, received those types of $20,000 or 200 transactions via those methods. That's what that's for.
Got it. And just sort of going back to the contractors in NEC, the question from the audience, if you pay a contractor through a third-party app, such as PayPal or Venmo, do you still need to do that 1099?
Yeah, that's a great question. There's a lot of there's not really a clear answer on that I'm able to find. I get asked that question all the time. Some sources say that it's covered, others say that it's not. So if you do want to cover your bases, I would just recommend filing the 1099 NEC anyway. Yeah, there's just last I checked, there's conflicting information on that. So I would just cover your bases and file it anyway.
Yeah, great advice, and worth reaching out to your tax professional if you have questions or concerns, or want to know whether you should or not on that. So I guess a question that we all have now is sort of, are popular tax strategies still viable in 2024, especially with all these changes that are coming in? So I want to talk a little bit about the real estate professional status, which is very commonly known one, and maybe perhaps misunderstood one as well. It's always been a popular tax strategy, but I guess, is it still viable for landlords? And if an investor is going to aim for a real estate professional status, what do they need to know, Tom?
Yeah, absolutely. I would say it definitely is still viable. I mean, to do this, it's still viable for 2024. Nothing has really changed. If you're trying to start doing it now, at this point in the year, I'd say you're going to be going through an uphill battle, because we are kind of getting into the final quarter of the year. To qualify, you spend more than 750 hours and more than half of your total working time in a real property trade or business. So that is for the entire year. It's not prorated. So if you started now, for example, you need to get 750 hours in before the end of this year, but it's still very much viable. There's no tax law changes that would be removing that. I've not seen anything proposed. That's not really been touched. And I don't expect that to change. It's been around for a very long time. Like I said, there's been no proposals or no indication that would be going away. The only question some people might have is, okay, well, it's really around bonus depreciation. Is 60% bonus depreciation still worth it? Does it still make the real estate professional status worth it? I would say yes, and we have plenty of clients who continue to pursue that status if they do have long-term rental properties. So yes, I would say it's still viable, and there's been no changes, and doesn't seem like there'll be any changes to the real estate professional status.
Great. And I think it's really important to qualify, because we've heard of a lot of case studies where people try and qualify and then the IRS obviously comes in and audits them. So make sure that your tax professional that you are working with is across that and diligent about actually allowing you to qualify for that.
Yeah.
And I guess another question on that is, what sort of evidence do you sort of need to present to the IRS to qualify for that? And there was a question around calendar showing real estate activities throughout the year. Is that sort of something that you need to stay on top of?
Yeah, absolutely. So I'll address that in just 1 second. One thing I just wanted to add in there about the viability of reps is that if you do have a full-time W-2 job, you are most likely, well, it's near impossible to qualify. And we just came across another tax court case very recently where another W-2 taxpayer lost their audit, and there's plenty of those throughout the year. So if you have a W-2 job, you're probably not going to qualify at this point. You're going to want to perhaps see if your spouse can qualify if you're filing a joint tax return. However, I just want to throw that out there. As for how to prove your method, it's the official tax code for the section says, "quote unquote," any reasonable means, which can include a calendar. And if you're good with your calendar and your calendar clearly displays the times that you're working in real estate and you believe that's substantial enough, then a calendar can certainly work. However, what we found to be the most credible evidence in most cases is going to be a time log. And a time log would typically include the name, the date, the name of the property. Include the name of your property, the date you worked on your property, what you did during that time, and then a description. And a description of what you did. My bad. How many hours, and then a description. So that's typically what we see in a time log, and those appear to be the most credible. However, calendars can also work if you're diligent about keeping your calendar up to date and provide sufficient detail about what you did and for how long you did it.
Great. So that's property name, date, amount of hours you spent on that, description. Was that the sort of all the bases that we covered there?
Yeah.
And yeah, perfect. So that answered one of the questions the audience have. And again, we'll share that information in the follow-up email that comes as well. So essentially, if you have a W-2 job, you're probably not going to qualify for this. And then if you are doing this full time, the time log evidence it needs to cover off in quite detail around that. Another sort of tax strategy is the short-term rental loophole, and you mentioned it just before. Maybe just give a sense of its current status, whether it's still an effective strategy, and how are people using this?
Yeah, absolutely. So we're still very much seeing the short-term rental loophole being used. Like the real estate professional status, there doesn't seem to be any indication of it being removed from the tax code. It's also been around for, effectively as long as the real estate professional status has. It's just been lesser known, but it's still effective. People are still using it, even with 60% bonus depreciation, and we still expect people to use it, like in the same way people still use reps when it's 40% bonus depreciation. So still very much effective. The one thing that I will caveat there is that while there's not regulation, or it's not that this is going to be removed from the tax code, there is regulation at various local governments and homeowner HOA associations, things like that are starting to regulate the market a lot more for short-term rentals. In some cases, flat out banning your ability to rent out your property for less than 30 days, or banning short-term rentals altogether. There's just a lot of stipulations there, so you want to make sure that if you are investing in a short-term rental, that there's no regulations in the market that you're looking at that could prevent you from using it as a short-term rental, or regulations that could be coming up the pipeline that could later prohibit you from doing it. And so that's just something to keep in mind. It's viable. You just have to be more careful about the regulations for your specific market in order to just make sure that nothing's going to stop you from using it.
And if you have any questions about whether the short-term rentals are allowed in your current jurisdiction, just feel free to reach out to a attorney. They'll be on top of these laws. We've seen quite a few states and cities ban short-term rentals recently. So, just make sure that you're on top of that going forward. Want to switch up gears and talk about accounting and bookkeeping. Always the fun subject. And we know it's a critical time, or critical for tax time. But I guess let's sort of dive a little bit deeper and explain why proper bookkeeping is so important for landlords, just beyond tax. I know that you mentioned before it's about, sort of getting more insight into your profit loss. There's importance for it around, obviously, the tax deadlines. But I guess, what is the sort of advice that you give to clients that come to you that maybe are not the best at doing their bookkeeping frequently?
Yeah, so the first thing is just understanding that, like, a mindset shift, that while bookkeeping is sometimes people view it as tedious, or it's kind of like, housekeeping, if you will, it is a necessary part of your business because it helps you understand, the inflows and outflows of your business. Are you profitable, right? That's the first thing. And then also, how do your expenses compare from a percentage basis on each property? There's times you look at clients' books and you might find that one of their properties in a market has, for example, utilities that are much higher on one property than another on a percentage basis. And that could be, this is an example, but that could be an issue. Maybe there's a leak in piping. Maybe, a tenant's letting the water run, or letting their air conditioner and lights on all the time, stuff like that, where you could kind of benchmark your property against your other properties and kind of see how they're comparing, and you might be able to find some issues in that. So that's kind of the first thing, is just understanding the profitability of your company and how you can maybe better manage expenses. You have more financial awareness when you have a good bookkeeping system in place. Additionally, sometimes lenders, depending on what type of debt you're getting, they may require you to submit bookkeeping to them, or they may require the bookkeeping to be in order when applying for the loan and going through that due diligence process. So by having your books and records up to date on an ongoing basis, you avoid a lot of problems and headaches, whether it be for financing or for tax purposes, which we mentioned before, but also in understanding how your property is running from a financial standpoint.
Awesome. And there are some very practical tips that you can use to stay on top of this, using software like Landlord Studio, digitizing receipts, using, automated types of features that are going to allow you to, track income and expenses throughout the month on a monthly basis. So we'll sort of jump into that in a second, but just re-emphasizing the point on proper bookkeeping, stay on top of all your accounting, income and expenses is just going to bring a lot more benefits than it seems, than just leaving it till the end of the year. So,
and I would just add one more thing on there. It could actually, from an emotional perspective, I know this isn't like hardcore financial data here, but it can help you relieve a lot of stress knowing that it's all in order and everything's up to date, and you actually understand how your properties are doing. It's not some black cloud where, some people is like, oh, my bank account's going up, so I must be doing good. But that's not always the best answer. So, just there's an emotional and stress related element too that I've seen. Just by having an order gives you a lot of clarity.
100%. Yeah. So I want to sort of touch on Landlord Studio and how we help you solve that bookkeeping and accounting problem. So we built Landlord Studio specifically to sort of make property management and, most importantly, the accounting bookkeeping side as easy as possible. And the key difference we did here was we took a concept like QuickBooks or Intuit QBO, where they have a product that allows you to obviously do accounting on a entity level, and we split it out so that you could do accounting on a property by property level, which is the key difference here. So I want to sort of cover off some features that Landlord Studio users love, including the bookkeeping side, including automated income tracking. So we know that staying on top of your income, especially when you have multiple units, multiple properties, can be time consuming. Typically, if you're going to do this in QBO, you're going to set up classes, or if you're using Xero, you're going to use tracking categories, etc., and that will allow you to split the ledger out so you have a P&L for every single property. We do that by default so that every property is covered. We also have that bank feeds feature that will allow you to import transactions directly into Landlord Studio and reconcile everything on a property by property basis, and also set up rules, etc. Online rent collection is a big one as well. This is sort of typically where some of those platforms like QBO and Xero don't really work as well as they do property management software. Rent payments, collecting rent online, digitizing that whole process, and receiving rent payments from tenants through a platform, which then translates into tracking all your income automatically on the ledger. So that's something that we have built into. Just touching base on the expense automation, so reducing sort of manual data entry and errors is really key. So linking your bank account securely into Landlord Studio is going to allow you to do that. And if that's not enough, you can also use our mobile app to scan receipts at the point of sale. Our software is going to read that, digitize that, store that receipt on file, and also help you easily just categorize those expenses. Our whole categorization is set up to the Schedule E, so you don't have to manually add in, chart of accounts or categories that sort of related to traditional accounting software. And then come tax time, you can easily generate professional account-ready reports, including that P&L, our purpose-built Schedule E, which gives you all the information you need to do that tax return at the end of the year. And then probably one of the most important parts of our software is that sort of mobile aspect. So being able to track on the go, log payments, log expenses, completely manage your property on the goes. For busy landlords that are doing this on a day-to-day basis, this is really a tool that's going to help you out and keep you more organized and just not need to use a laptop, etc., and will really help you do that. So, and then finally, the sort of secure document storage. So everything from importing lease lease agreements to important lease documents around the tenant, any sort of key insurance documents that need to be stored on file for each property. We really help you do that, and also that smart receipt scan that will store those receipts on file for each expense, so that if you ever need to retrieve sort of hard copy evidence of that expense, then you can do so easily. So yeah, get started with Landlord Studio on our website. You're not only avoiding that last minute scramble when preparing the taxes, but you're also setting yourself up for that ongoing financial success. And our software really makes it easy to monitor your cash flow, which is something we emphasized before. Monitoring cash flow, knowing what your numbers are saying each month is going to help your entire business just operate more effectively, and also help you mentally be able to just know exactly what's going on at any time. So jump in, have a tryout. You can get started for free. And the best part is, you can jump in and use our Landlord Studio for free up to 3 properties. So definitely a worthwhile way to see how you could use a tool like this to automate a lot of the things in your business. So we're going to jump into the sort of last part, which is the Q&A. I know that there is a few questions in the chat here, particularly around Landlord Studio and QuickBooks I've seen. But if you do have any other questions that you are burning to get answered, please drop them into the chat. We'll endeavor to answer those now. I know there's one here around Landlord Studio with QuickBooks. We don't currently integrate with QuickBooks. We integrate with Xero. At this stage, we will and are planning to integrate with QuickBooks in the future. We've seen ourselves as a cash basis tool that really helps you to come off a traditional accounting tool like QuickBooks, but obviously when you need a little bit more extra in-depth accounting, and maybe you're working with a CPA that's already using QuickBooks, then we understand that there is a need there to supplement as well. So we are planning to integrate this. At the moment, we only have the Xero integration. So if you're familiar with Xero, then you can jump in and try that out as well. We'll just give it a couple of seconds here for any other questions. Was there any further details that we didn't cover off in today's webinar, Tom, that you'd like to cover off?
Yeah, I was going to say, just in general, you want to make sure that you're staying on top of the deadlines, whether it's the filing deadlines for your individual tax return on 1015 or the 1099 NEC deadlines that are coming up on February 28th of 2025 for the 2024 tax year. You want to make sure you're on top of those. You want to make sure you have your bookkeeping in order. And of course, if you're going to be using strategies like the real estate professional status or the short-term rental loophole, you want to make sure you have that substantiation of the time to be spent. And ideally, you want to keep that on a proactive basis. You don't want to be creating the time log during an audit. We've seen people actually lose an audit very recently because they recreated the time log during the audit, and it just wasn't accurate, and they ended up losing in part because of that. So just want to make sure you're on top of that.
And a great way to actually add to that is we have a feature called the mileage recording. So we actually allow our app actually will automatically track your mileage route and add all the details in. And I think adding those sorts of details to any sort of reps qualifying records is going to really help build that case as well. So just having more detail around, what you're doing on a day-to-day basis.
Absolutely.
A couple of questions here. So at what point would you recommend real estate investors expand beyond bookkeeping to what Landlord Studio offers to a platform like Xero? So you can look at Landlord Studio in two ways. We're split into two areas. So the first is the accounting bookkeeping. The second is the property management software. So that's listings, rent collection, tenancy management, etc. So, I mean, we have users well over 500 units using our product for some of those aspects, but they might have a little bit more complex needs. They're in partnership arrangements with investors, or they need full balance sheet depreciation schedules and things like that. So what they'll do is they'll use a product like Xero or QuickBooks alongside Landlord Studio. So they'll typically start to move into the full suite accounting where they have a CPA and a bookkeeper using that, so that they are covering all those bases there. And then they use Landlord Studio to do things like the rent collection, tenant screening, listings, maintenance, etc. So I would say at that point, it's when your accounting needs start to get more, complex, and you have different structures in place, etc., etc. That's sort of when we recommend to start to incorporate some of those other tools into your suite. A couple of other questions. Any suggestions for good tax write-off opportunities for real estate investors? We sort of covered some of them today. Any other ones you wanted to add, Tom?
Yeah, I would say that the real estate professional status and short-term rental loophole are probably the two biggest ones. Outside of that, you're going to have your standard expenses that you're just going to take to operate your property, things like utilities, maintenance, repairs, property management fees, property tax, things of that nature, like standard operating expenses. You could find that on Schedule E of your tax return, and I'm sure you could also see the outline for that at Landlord Studio as well. But I mean, outside of that, you're really looking at maybe the home office in certain circumstances. If you are self-managing your property, a home office is often a viable tax write-off for you. Especially if you have income from your rental properties, if you have losses, you won't be able to take the home office deduction, but you still may want to have a home office anyway, because it does help you to maximize your vehicle deductions. Because once your home is a place of business, then the miles you drive from your home to, say, the bank or to wherever you need to go for business purposes, those are now going to be tax deductible. Whereas if you didn't have the home office, those miles would be considered personal miles from your home to your first business location of the day. So there's something to keep in mind there. And the last thing I'll say, while not exclusive to real estate investors, is using bonus depreciation on your vehicle, on a business vehicle. So if you purchase a vehicle that has a gross vehicle weight rating of 6,000 pounds or more, these are typically trucks, SUVs, and vehicles like that. If you do use it more than 50% for business, you can use bonus depreciation on the vehicle. And if you are using reps or the short-term rental loophole to turn your losses non-passive and offset your W-2 or business income, then that is going to be that's going to be just another way to generate even more losses if you do have a legitimate need for a business vehicle. So that's kind of the last one I would leave it off with. But yeah, at the end of the day, you have your standard operating expenses, and then some of these other bells and whistles that go around it.
And Lindsay, we've actually got a couple of webinars that we did earlier on in the year that cover off these different things in a lot more detail. So if you jump on our website and go to our webinars section, you'll be able to find the other webinars that I've done with Tom. We go into a lot of those write-off opportunities in a bit more detail. Garen, Schedule E doesn't show individual users, so I'm assuming you're referring to our Schedule E report. Mine shows them combined. Can you get individual units to show? So typically the Schedule E, when you're filing that tax report, you're actually doing it on a building level. So if you've got a duplex, for instance, you're not actually filing the Schedule E on each individual unit. Am I correct there, Tom?
Right. So you're usually not filing a separate Schedule E for each unit. If you have a multi-unit property, those are usually reported on one column of Schedule E. That's usually how it's done. So you usually report each property in its own column on Schedule E. You typically don't do each unit. We've seen it done before, and it makes a lot more administrative work usually than necessary.
Yeah, so that's the reason why we've combined them on that report. If you're looking for a breakdown of each individual units, there are some other reports in there that you can run, including the income expense statement, breakdown statement, etc. The mileage should be showing on that Schedule E, so I'll look into your account for that, and I'll follow up after this call. Hector, Thomas, big fan of the Tax Smart Real Estate Investor podcast. You've got some fans in the audience as well. So,
thank you, Hector.
All good. That's all the time we have for today. I'd like to thank Thomas again for joining us and sharing his experience. Tom, if they have any more sort of tax-related questions, where can they sort of reach you and find more of your resources online?
Yeah, absolutely. I'd say if you have more tax questions, you can join. We have a free community at www.taxsmartinvestors.com/public. And you could go ahead and join that. We have a public forum in there. It's hosted on Circle. If you have questions, you can go ahead and jump into there. And we're usually able to answer most of the questions that end up making its way into those forums. So if you do have specific questions, I'd say start there. Or, if you are looking for a new CPA or new CPA firm to help you navigate this world of real estate tax, then I'd say you can request a free 30-minute discovery call by going to therealestatecpa.com/Thomas, and that's the best way to get that conversation started. But if you just have a few questions, then www.taxsmartinvestors.com/public would be the best resource.
Amazing. And I've just dropped those links into the chat. I'll also drop those links into the follow-up email to come. So again, encourage you to check out both Thomas's resources and his website, and also encourage you to check out Landlord Studio's tools to help you streamline. For those who had questions specifically around the bookkeeping and accounting features in Landlord Studio, please jump on our support help center. You'll find a lot more breakdown into how they all work. Alternatively, reach out to our support team. You can request a demo or a support call, and we can jump on a call and go through them in a little bit more detail to show you exactly how they all work. And again, thank you for attending today's webinar. This will be online as a replay. And again, thank you. And until next time, hope everyone has a great day. Appreciate it, Tom, and have a good day as well.
You too. Bye now.
Please follow, share, and rate us on whatever streaming channel you're listening to help other real estate investors find our content and to stay up to date with our latest episodes. Now, these podcasts are recorded as live webinars, so feel free to follow us on all socials at Landlord Studio if you want to attend live and have your questions answered by our guests in the live Q&A at the end of each session. See you in the next episode. Take care and happy renting.